Hello, Jim here. Selling options is a great way to make some extra income on a monthly basis. Now, when you make a few adjustments like closing early or potentially managing the trade in a different way, it can have a profound impact on the return on investment and how much you can make on a monthly basis or overall on a yearly basis. So stay tuned. I'm going to share with you the details, and then at the very end of the video, I'm going to go through some trades that I recently closed early that really improved their ROI. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. In most of my videos, I talk about picking the right stock at the right price is critical. And I believe it really is. If you make those decisions correctly, you've won half the battle. Once you have come up with a stock and a price you like, then pairing it with the right strategy is really critical. I really like the vertical put credit spread. I'll go out usually between 30 and 60 days, sometimes as far as 70 days. And I'll use a delta that's typically around a 15 delta. And what that lends me or gives me is the ability to get like another 10% off. So if it's a stock that you really like and it's $100, it means you could potentially pick that stock up at $90. Now, what happens, and the reason I call it my sweet spot, is if you pick that stock up at that price, you're getting a great stock at a great price, and you should be happy to have assignment. And if you don't get it and you have the ability to close it early, then you can potentially have an unbelievable return on investment. I'm going to share with you 5 trades that I did over the last month or two where this has happened, and my return on investment has been right around 300%. Sometimes as high as 400%. I think my lowest was like 270, 280. So I'll share with you those details at the very end of the video. But I find that the higher DTEs are safer, and a lot of different YouTubers talk about that. Like Tasty talks about it. They talk about how, a 60-day is safer than a 30-day. A monthly is safer than a weekly. A weekly is safer than a daily. And they're all safer than zero DTEs. To me, zero DTEs are very risky. It's almost like gambling. You really have to know what you're doing to be profitable with that. And you really have to manage the trade. But when you go out, 45, 60 days, and I think my sweet spot truly is 45 days where I can have a lot of success. It also relates to the lifespan of the position. So over time, the theta, it's called theta decay, the extrinsic value of that position will decrease. And then at some point, especially if the stock was underpriced or fairly priced and it goes through a period where it increases in value quite a bit, then that becomes a very profitable trade. I've rolled in a lot of cases, probably more so than closing. Now I'm changing that strategy. The last 2 months I've been closing probably 50% of my trades. And it's the same thing as rolling. Rolling is just closing your current position and opening a new one. But the difference that I'm making now is I'm closing that position, then I'm waiting for when that stock drops at some point, and then I'm opening a new position. So it's kind of like a delayed roll. So you close, and I usually do it between 70 and 90%. I may even go a little bit cheaper depending on how risky the position is, but it's worked out really well. The 4 or 5 positions I'll share with you at the end of the video, I closed all of them between 80 and 90%. I believe one of them was over 95%. And I think that's probably waiting too long. There's definitely also a sweet spot for closing. I know a lot of people will close at 50%, some at, 70%. I've even heard 25%. But I found for me, 70 to 90 is really a good percentage when it's that profitable. To give you for instance, if you make $100 on a position and you can close it for 30, then you should go ahead and do that potentially. So I found that's really made a big difference with the amount of income I can make on a monthly basis, and as well as my returns. It also keeps my accounts or portfolios a lot safer, meaning I don't have as many positions that are open. So every day I kind of have a routine that I do. I first look to see, are there any positions that I could potentially close or roll? And if I can, then I'll usually go with the least expensive option. So if it's showing like the bid mid ask is, 15, 20, and 25 cents, I'll try 15 and I'll get that trade out there, because then I can manage the trade. I can repeat it at a lower or higher basis to see if maybe then it'll be filled. But I get it out there so that I'm able to manage it. Then I'll look to see if there's nothing I can close or potentially roll. A lot of times I will also look to see if I can roll, if I can't potentially close, especially if I'm getting really close to expiration, or potentially I'm worried about earnings, or I need to get it into a safe spot. Like I recently did that with EAT. I made some interesting comments to my membership. I when I do something out of fear, it typically does not work out for me. In this case, I did roll it because I was worried that they would miss earnings. Last time they missed earnings back in late April, they dropped 14%. So I was really worried yesterday that they could potentially drop that much. So I did end up rolling, and what happened, they actually had good earnings and they shot up like 5% or something along those lines. And they were expiring on Friday, so I could have let them close. So in the sense, what would have been or worked out better for me is just to be patient, because I would have been okay if they had been assigned to me. And going along with patience is also decisiveness. If you see something and it's fairly profitable, maybe it's not quite profitable enough for you, then be decisive. Decide to make that trade. Go ahead and close that position, or potentially roll the position. Now, lately with the crazy market and it's been fairly high implied volatility at different times, but I typically will, use the highest ask, and then again, get the trade out there, get the position out there so that I can then manage it later in the day. So it's both patience and it's also decisiveness, trying to decide what you want to do. What helps me with that is I do have goals that I set up, and I encourage all my members to also use goals. I share them at the top of my planning worksheet. I have a 2,000 weekly goal just for premium and an 8,000 on a monthly basis. That doesn't include dividends or appreciation. And once I get close to that, like right now, I think I'm at like 3,900, and I have halfway through August, I have another day tomorrow. So I'm right on track, but I've had other months where I've been way ahead of schedule. And in those instances, I even up the patience even more. Like I don't necessarily need to make a trade, so I don't push myself to make a trade. I typically make 1 or 2 trades a day. And then if I hit my numbers, I don't continue to make more trades. I'm very risk averse. So if I can reach my goals, I'm fairly happy. If I can, do a little bit better than the S&P 500, or in some cases with smaller accounts, I can do a lot better. If you're curious to more about that, if you go back to 2 videos ago when I did a video about how small accounts really can outperform, and as that account grows and grows, it becomes more difficult to make the really high returns. So take a look at that if you're curious. But making decisions, once you have goals, becomes a lot easier, because in some cases I'm doing other things and I don't want to get back on the market. So if I'm able to meet my goal for that day or that week, I might not even trade that day. I might take the rest of the day off or focus on my other business activities, either related to my YouTube channel or my software consulting business. So the only other big point I want to make is it's important to manage your trades early and often. So at times in the past, I've gotten too busy, but I don't have a ton of trades or a ton of positions. So I'll go through each and every position and I'll look, and usually I can eyeball it to determine if there's a potential for management of that position. And the earlier you do that, like I just recently closed a position that was expiring in September, and it was already fairly profitable. So I freed up those funds. If I hadn't looked at all my accounts and taken the extra 5 or 10 minutes to go through all the different trades. And the brokers typically make it really easy for you. You can sort by gain and loss. If you're dealing with Schwab and you're on their summary page, you can sort all your options positions across all your accounts in one area, and that becomes very helpful. But so you can easily see if something's fairly profitable, like I said before, higher than 70%. And then you can make decisions that are necessary for that account. So I don't want to go into too much more detail. I do find that sometimes a visual is easier to understand. So let's jump into the next part of the video, and I'll talk about the trades and why closing early it can really make a huge difference in your return on investment, as well as just the amount you can make in your different accounts. So stay tuned. Let's jump into that next section. Okay, now here's my spreadsheet. I just took my planning worksheet and just modified it and made a copy so I could just show these trades and make it a little bit less confusing. If you're curious about my memberships, details will be in the description. I do have a lot of people joining. The Discord's growing. I keep adding more bells and whistles to it. I have a lot of people sharing their trades. I've talked about this before. I'm happy with my returns, but I do have members who are doing better than I am. It was interesting in the last Trader Club meeting to hear one particular member who was talking about I believe he said he has gotten like a 30% return on a yearly basis, which is really good. And I have other members that I think are even doing better than that. And I do break up my Discord where I have risky trades, I have my trades, I have trades that other people just want to share. And then people are sharing videos, they're sharing what they've learned from other people and what strategies they're currently using. And that's my goal. I really want it to turn into a place where people can go, that can share ideas. It's not just me telling people to trade like I do, again, because when I do share my trades, I make a trade, then I post it on Patreon, which you can turn on the notifications with Patreon. So people get a notification that I made a trade. Then I post it to Discord, and the same thing. You can also set up Discord to provide you a notification for when the trade is made. But I always encourage members to take my trade, try to make it better, look at different strikes, look at different expirations. Typically, the companies that I'm working with are really good companies. I don't stick to 3 or 4. It seems like a lot of the YouTubers stick to a very few, and it seems like it's always Palantir, SoFi, and maybe AMD. I do really like AMD. So you'll see these are these 300% ROI trades are kind of a good mix of companies. Most of them are very big companies and some of the biggest companies out there, as you'll see in a minute. But then there's also a really small company that's been really profitable to trade on. So let's jump into this real quick. I'm not going to go into a lot of detail. Here you can see my weekly goals. And then with these 6 trades, it was 1316 is what the 6 trades made. First one was AMD. AMD has just had really good implied volatility. It's been really easy to trade on. And with it shooting up, it's been really easy to close early. So I did a vertical put credit spread. These are all vertical put credit spreads, my favorites. It was a 20, 120, 110. The delta was a little bit higher, 19 delta, but it was expiring on 8/29/25. The current price at that time was 166. I made 221 of premium, and I had a 324% return. The required capital is just 2,000, the spread, and 2 contracts minus the 221. And the reason that it was so high is I was able to close it on July 28th, which it was only open for 14 days. So it was closed way before 8/29, almost over a month before. So in that turn, I believe originally it was like 120% yearly ROI, and it turned into a 324. And since then, I've done, I think, 2 more AMD trades, and one of them is here, but I've done 1 more since then. ANET, another AI company, it's done really well over the last month. but I like it. I do want to own some of it. I did this back on 710, 95.85. This one I took a little bit more risk. I felt like it got hit one time and I felt like it was underpriced. So I will go with a slightly higher delta if I think it's at a really good price. I think it's now in the high 130s. So the current price at the time was 114. I could do a 95.85. I brought in 190 in premium, and then I was able to close it way earlier. I only had it open for 13 days. So late in late July, I was able to close it. So it turned, in this case, I think it was like 120% return, 140, and it more than doubled that. If, one way to figure this out, what it was before is, if it was 20, it was like 29 days. So it was about half as much. Then AMD, I did another AMD 8-1. I opened and closed it all in August, 145, 135. Current price was 172. So even with a fairly high price for AMD, I still was able to go with nice low strikes. And this was a 15 delta, so my favorite trade, a 15 delta. I brought in 248, which is a lot of premium for AMD. I was going out at the time all the way to 919, and I was able to close it way early. AMD has just shot up, and I only had it open for 12 days. So I opened it on 8-1 and I closed it on 8-13 or 8-14, and turned into my best return in quite a while, 431% on a good name. Now I own 200 shares of AMD. I want to own 400 when all said and done. I do think we're going to get a pullback at some point, and you'll probably get a second chance to pick up some more AMD. It might not drop all the way back, but I could see it back in the 160s, and then you could sell some 145, 150 strikes on it for some pretty good premium. Applied Materials, they have earnings tonight, I believe. It's August 14th. I think it's post-market. They have earnings. So I closed this one early, and I plan to do another one after earnings. So this I opened on 620. It was expiring on 8:15. So I went out quite a ways, and I closed it after 18 days. So I literally closed it in early July. So I believe it might have been like an 88% return, because I was able to close it with a majority of the days to expiration. So yeah, originally 57 days, and I closed in 18 days. So, and then again, I could put that capital back to play, and it's worked out really well. Like I said, I'll probably make an Applied Materials trade tomorrow, is what my guess is, depending on what happens. Especially I'll make it if AMT, Applied Materials, misses earnings and drops big time. I really like to make trades after that happens and pick them up dirt cheap. If they blow out earnings, they could shoot way up, but they typically have stayed pretty in line with earnings. They're these really big technology chip makers. They do a very good job forecasting, and you don't see these huge discrepancies like you do with earnings for some other companies. And their guidance is usually pretty good too. Now, this is one of those small companies. It's a security company. They provide a security app that you can use for checking in and out at the airport. They also have it for stadiums for security purposes. They're going overseas now, but it's a small company. It's got really good profitability, and it's not really overpriced. It definitely wasn't overpriced when I made this trade. I did this on 610, 25.22, so a pretty thin spread. And originally it was going to close at 6.8 or 7.18. So it was like a 40, I think it was 40 DTE. I made 242, and you can see here that the required capital was really low, 957, and that's just the 300 times 12 minus the 245, and it was 245%. I didn't close it quite as early. I think it was only a couple days early, but also a fairly good return. Now, this is one of those, I believe it at one point I could have closed it like 10 days earlier and probably had more like a 300% return. But again, I'm working on this. I'm trying to become a more proactive about closing. And last month, I think I started with more positions, especially puts, than I ended up with fewer. And then also in June, I ended up with fewer. So my number of outstanding positions is definitely dropping because of this, because of closing early. And then Amazon, I just did this today. This morning, I closed it. And I had originally opened it on 8/1. I closed it on 8/14. It was a 195, 185, a 16 delta. The U was a little bit higher with the delta. But in this case, this was my favorite trade. A lot of times, this 16 delta, the next lower was probably like a 12 or 13 delta. It was expiring all the way out in 9/19, so it still had a lot of time left. But it was also like 80, I think it was 84% profitable. So after closing, and I spent $35, so I do have the closing amounts in here too. They're net of what it cost me to close. And then my return was 274. And that's because I had it open only 13 days. You can see it's the premium divided by required capital adjusted for the year. And since I only had it open for 13 days, it worked out really well. So now if I look at these 6 trades alone brought in $1,300. The required capital was less than 10 grand. And then my yearly ROI on average was over 300% when you average those together. So closing is key to really having higher returns, higher ROI, pairing it with a really good strategy like my vertical put credit spread at 45 to 60 days around a 15 delta has worked out really well. I've also done this with iron condors. I'll close them also at like a lower percentage, 60 to 70%. And I just think it's a better way to run these strategies. It also allows you to, reuse these trades. Like I said before, I think in these 2 months, I've had 3 or 4 AMD trades where I made a lot of money. Plus, I picked up 200 shares and I plan to pick up 200 more. So let me know what you think. Are you closing early? Or are you letting your positions expire? Are you using a strategy like the vertical put credit spread? Or are you primarily using cash secured puts? Please leave a comment. I typically try to respond to my comments within usually 2 to 3 days. So let me know what you think. I'm curious to what you're doing. And as always, thanks for taking the time to watch the video, and I hope you have a wonderful day.